Hi everyone, welcome to this month's Financial Markets Update. I'm Piers Bolger, Chief Investment Officer for Viridian Financial Group. Well, this month it's all about emerging markets. I know many of you might have heard the term emerging markets, developed markets, but when thinking about emerging markets, what does it actually mean? Well, it basically means economies that aren't developed, like Australia, like the US, like the UK, and like broader Europe. We're talking about China, we're talking about the Philippines, we're talking about Vietnam, Indonesia. We're talking about countries that are moving up and slowly growing their economies. These countries are important because they represent nearly 2/3 of global GDP. They have nearly 60% of populations under the age of 25. So when you think about what drives economies, it's often the consumer. And as these economies are growing, the demand for goods and services is also growing. So from that context, we believe emerging markets should form an integral part of any investor's portfolio when thinking about global equities. Unfortunately, more recently, we've seen the trade dispute between China and the US have an impact on the performance of emerging markets. Through 2017, emerging markets delivered a fantastic return. We've seen that over the last couple of years, but more recently, we've seen equity markets particularly get challenged on the back of the trade dispute and what it actually means for emerging market economies. We've also seen the currencies within those emerging market economies decline as well. Notwithstanding that, we think the fundamentals for emerging markets continue to remain sound and are very different to what they were 20 years ago when looking at the currency crisis back in 1998. Balance sheets, fiscal positions, political and regulatory environments are far stronger now than what they were, and corporates in of themselves and the way that they're delivering their goods and services, not only within their own countries but globally, we feel makes them a lot stronger than what they were back then. Nevertheless, you need to be mindful of the positions, you need to be mindful of the risks at any point in time, and certainly understanding what the trade dispute may do longer term, we just simply don't know. So we've been moderating our position slightly in regards to emerging markets. As I was saying earlier, we don't throw the baby out with the bathwater. We think the fundamentals for EM over the long term remain really strong and a really important component of investing in global equity markets. As always, if you've got any concerns about emerging markets or your strategy in general, make sure you speak to your advisor. Thanks and bye for now.